action. Hello guys, welcome back to another video. Today we will be going over Booz Allen Hamilton. I'm truly sorry for being absent for these past 5 months. I've been honestly doing a bunch of stuff. But without further ado, let's get into this video. So here we are in our slideshow. Let's go to the first slide. What do they do? So they're an American management and information technology consulting firm. In their own words, they say, "We bring bold thinking and a desire to be the best in our work in consulting, analytics, digital solutions, engineering, and cyber with industries ranging from defense to health to energy to international development." So they wear a lot of hats. This company's stated core business is to provide consulting, analysis, and engineering services to public and private sector organizations and nonprofits. We already established that they're a leading provider of management technology consulting services. But one key thing is it's primarily to the U.S. government in the defense, intelligence, and civil markets. This is a key thing to remember because I'll bring it up later on in the video. Now let's move on to Yahoo Finance here, our basic metrics. So we have the market cap, which is $11.8 billion roughly, or $88.40 per share as of April 11th, 2022. So here we have our earnings per share for the trailing 12 months, which is $4.20 per share.
Nice.
A price to earnings ratio of 21 times, and a forward dividend and yield of $1.72 or 1.95%. Anyways, here we have our main positives. So we have a solid dividend that grows every year. I will touch on this later on in the presentation, so keep it in your head. They're not subject to sales volatility, quote unquote, or I have in parenthesis here, recession proof. Again, key, I'll address this later on in the video. They just purchased a leading IT solutions company. This will be addressed too. It was highlighted in one of their more recent earnings calls. The price to earnings ratio is not too high. It's 21 times. The current average for the market right now is about 28 times. So this is well below that. And then they also have a solid EGR, which is a earnings growth rate over 5 years. What I mean by recession proof is that, I address this later on, but they're paid based on government contracts. So these government contracts have a certain lifespan to them, which is typically around anywhere from 1 to 5 years, maybe longer, maybe less. So most of their contracts are in the 3 to 5 year range. So if we were to have a recession right now, these contracts would still be valid and they would still be paying out revenue, recurring revenue for Booz Allen Hamilton. So that's why, in essence, they are somewhat recession-proof, whereas a company like an oil company could lose half of their revenue, right? Or a big bank could lose half of their revenue. Next, let's take a look at their Zacks estimate. So their estimated EPS next year is $4.54 per share, which represents a 10.2% increase from the previous year. Their sales estimate is $8.96 billion, which is a 6.4% increase from the previous year. Their expected earnings per share growth for 3 to 5 years is 8.26% annually, which once again represents that solid EGR that I touched on in the main positives. Now let's take a look at their earnings call Q2 2022 takeaways. So they performed well, all considered this quarter. They bought 2 companies, Liberty IT Solutions and TracePoint. They had strong increases in net income, EBITDA, revenue, and net cash from operating activities, which are all strong pluses. And they also continued their capital allocation priorities, which were their operating needs, quarterly dividend, strategic mergers and acquisitions, which is the M&A, share repurchases, and debt repayment, which are all good things, good priorities for their capital allocation. So now let's take a look at their dividend history. So on the left, we have the dividend history from the NASDAQ. This is provided by the NASDAQ website. You can go look it up yourself. Since 2018, the dividend has more than doubled from 76 cents to $1.72. And since 2015, the dividend has tripled.
Oh my God! Wow!
With earnings expected to grow around 10% annually at the minimum, these same increases in dividends can be expected in the next 5 years. So, continuing along this trend, we can see the dividend jump to roughly $3 a share by 2026. That's a dividend yield of 3.6% on a current buy price of $88.40, which is what it is as of April 11th, 2022. Now let's also look at a key trend, which is their cybersecurity. So the US of A, the US government, allocated roughly $20 billion to cybersecurity in 2021. And in quotes here we have, cybersecurity ventures anticipates 15% year-over-year growth. This is from the press release on an article relating to cybersecurity and the growths within this economy. In 2004, the global cybersecurity market was worth just $3.5 billion to Steve Morgan, founder of Cybersecurity Ventures, and now it's one of the largest and fastest growing sectors in the information economy. Cybercrime is predicted to cost the world $10.5 trillion annually by 2025, up from just $6 trillion in 2021. So it's a major growth. And if you guys don't know, they operate in the cyberspace, as was listed up at the What Do They Do section. So if they are able to capitalize on this spending in any way, shape, or form, we can see major increases in their revenue. Anyways, let's move on to the acquisition, which is the Liberty IT Solutions acquisition. So Liberty IT Solutions supports multiple government agencies across a diverse portfolio of health IT projects. So Liberty contributed approximately $16 million to revenue growth for Q1 2022 alone. Liberty also helps to manage large national programs. So health organizations must strike a balance between continuously evolving for the future and maintaining critical day-to-day excellence. So walking this fine line requires highly efficient and adaptable health technology solutions. So, in other words, it requires modern information technology. So Liberty IT Solutions provides this technology to these health organizations across multiple government agencies. So this is my conclusion. Growing fears around cybersecurity, the acquisition of a leading IT solutions firm, and continued growth in multiple facets of their business will lead to a more robust revenue stream for Booz Allen Hamilton. Couple that with a history of success, strong projections for the future, and a steady growing dividend, and you get yourself a winner here. Since we have concluded this presentation, here's my work cited. You can get all the information that I have detailed in this video, and it is all here at the end, which will be posted in the description, where you can get access to this whole slide and get to see this work cited where I have all my evidence. If you made it all the way to the end of this video, I truly thank you. Please drop a like and subscribe if you enjoyed the content. Drop a comment too, say what's up. It can be mean, I don't care. Just don't try to be too mean, don't try to hurt my feelings. But alright guys, thank you for watching. It's been Matthias Trey, it's been a pleasure. I'm out.